What's going on, traders? It's Lucas here from the Commitment of Traders Club. Thank you so much for joining me today. I've got a fantastic video lined up for you on a trade which we took over on our club membership program. It is GBPUSD, and you'll want to sit tight for this one and watch this to the end to learn how to really put technical analysis to the test and take some huge profits in the process. Stay with me, guys. I look forward to seeing you over on the chart. Let's go. So over on the chart, we're on GBPUSD, looking at this on the 4 hour. And this is a trade which we took as part of our club members. And we profited a huge 90 pips or so, 92 pips from this move to the downside. How did we do that? And I published this firstly on my Instagram page a few days ago. There we go for proof to show that this was a potential zone. And lots of my traders took this trade and are now thanking me for the signal. No problem. But how did we get to this trade? Now let's break down the technical analysis, give you some ideas of the indicators which we use so you can improve your Forex trading plans, your strategies, and how you can read the charts better. So what I'll do is I'll head over to replay mode. I'll see you there in a second, and we can break this down as it played out on real time. So we're back here on the replay mode. And what I've done is I've replayed it back to how we were when I first published my signals over on Instagram. And what we saw here was that the market had pushed up to this potential level of interest. Now, some traders will be looking at this level and thinking, fantastic, we are going to be looking for sell opportunities from this level. The market has been posting a nice downward trend recently, and we're going to look to sell here, which is fair. But what you need to do is analyze the market from a bigger picture rather than just looking on a 4 hour. Now, even if you're a swing trader or a day trader, you need to look at the bigger picture before you even enter a trade. So what I do is I notice the potential for the trade on the 4 hourly, but I zoom out on the daily to plan my trade properly. And this is what we can see. So what we saw is the market was pushing very nicely previously towards this uptrend. But since the 1st of June, we've had a push after the consolidation, a push now to the downside. So we're certainly looking for sell opportunities here. And I'll get to that in more detail as to why we're going to sell opportunities. But on a pure technical analysis reasoning, we posted a lower low here after these lower highs from the previous high. So this is certainly now a market for us to short in. Now, as for patterns, what we see here is a very nice and clean head and shoulders pattern. We've got one shoulder there, two shoulders here, our head, and then obviously the neckline, or perhaps a little bit below, wherever you want to draw it. The neckline, some traders would have ended on the retest, which they did, and they would have gained some profits, and others may have ended a trade on the second retest, but that's not the way that I took the trade. And I'll show you exactly why I waited patiently for the market to make a deeper pullback. So if you've watched my videos before, I like to use the Fibonacci trading tool. It works perfectly for my plan and allows me to take cleaner and more precise entries and not just taking a trade here and there. So looking at the daily, I took my Fibonacci tool, and what I like to do is draw it from the higher high previously to the current lower low. So draw it down to the low, and on comes our magic number, the 0.618. Those of you who have been with me from the start, you will know I love this number. I trade the Fibonacci all the time, and I always wait for the price to come back to the 0.618. Sometimes it doesn't, and I don't get triggered into a trade. But hey, that is that's how the market moves. Sometimes you win, sometimes you lose. So, going back then onto the 4 hour, what can we see? We can see that the area of interest that some people would have been looking at is certainly a fib level, or halfway for a fib level. And many traders would have taken a short position here. And that's perfectly fine. That this particular setup may have triggered them in, but not for me. For me, it has to be the 0.618. And as we'll see, the market cut them out. Okay, thank you. That's more profit for me to take, so thank you guys for that. The point I'm making is set your plan, backtest your plan, and stick to it. I've noticed that the 0.618 zone is respected highly in my Forex trading career and in my backtesting plans. And I like to use it because the banks use it as well. And if they use it, then I'm using it. So What we saw here is that the 0.618 zone is posted on there. To further add to our bias and to our edge, we can see that this particular zone is number one, a key level. We're looking at the 140,000 zone. Banks love a whole number. We love a whole number. The market respects these whole numbers. It's just human nature. We like things to be all squared up. So there's confidence number one. Good potential point for the market to come and retest. Bias number two. We've had multiple rejections from this area, or even supports from this area looking to the left. We've had it once here, twice here, pushing back 3 times, and some would say here 4 times. This is exactly what we're after. We like to see that this market has been retested multiple times. It therefore makes it a key level rather than just a medium level or, you know, nothing, noise. 4 hour, we'll get rid of that noise and show you why it's a key level. Now this area here is arguably a key level for many reasons. The first being that it has been tapped also 4 or 5 times. But when you zoom out on the daily, this is where it gets really interesting. You'll notice that it doesn't form part of a key level. In fact, the candle patterns have pushed above it. Whereas if I draw now my interesting 618 zone, and we'll draw it from the left, we can see that again, 1, 2, 3, 4, 5, 6, and even here 7. This is the key level. This level down here is not the key level. And for those of you who didn't pick that out and you entered a trade from that and didn't wait patiently for the market to do its thing, you'd have lost out. So simple price action analysis here. Identify the key levels straight out of the bat. Zoom the chart out, you can see then exactly which levels have been respected, and the same will be on a weekly. Again, here's the key level. Tap, 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 tap. So now that's set, what I do as a trader is I set an alert, fire and forget, leave it. I got an alert to say that the price was moving up towards the 618 zone. Now I'm interested. But what do? I wait patiently. We don't just want to put a pending order straight away on the 0.618 zone and hope for the best. We want to wait patiently and see that the market changes from the bullish momentum into the bearish momentum. So let's see what happens. Okay, perfect. A nice strong wick rejection candle. You can see here that the buyers are starting to lose control and the sellers are pushing price down from this area. This, amongst other things, is a perfect signal for me to enter into this trade. The buyers are losing power and the sellers are stepping in, pushing this price down. But before I show you why I entered this trade, I want to rewind a little bit and go back to the very beginning. You'll be asking me, Lucas, great trade, or hopefully you'll say that, great trade. How did you know it was going to do this? How did you not know that once it broke through this level, that it was going to come back and retest and push up? I'll show you. What we want to do as smart traders is we want to trade with the banks. For those of you who aren't a club member, feel free to check over our website. I'll link it in the description. And you can get access to the best and clearest commitment of traders data out there, which will show you exactly what the banks are doing. So we're trading GBPUSD. And I'll do this before I even think about putting a trade in, before I even start to analyze the chart. I want to know what the banks are doing. So we click view report and up comes our chart. And what we saw here from the 20th of July, there's been a huge shift in momentum from an institutional basis. From the weeks previously, the net positions were long. Banks were looking at longing GBPUSD. But then on the 20th of July, that all changed. And now the banks were net 3.5k short positions. To support this again, we can see that from the 15th of June, the banks were up 32,000 positions to the long side, and that has been slowly dwindling away until now we were at minus 3.5k positions to the short side. There is my signal that I'm only looking for shorting opportunities. Now we don't know when the banks are going to be entering into their short position. That would be cheating, but this chart here gives us the indication that they are going to be doing it. So there's no reason to take any long trades because you're just going to get stopped out eventually. So knowing this before we even go over to the chart then allows us to draw on something that the banks like to do, the Fibonacci tool. Again, going from the daily, from the high to the low, 0.618. Technical analysis, it matches into our key number, the 140,000. It matches into our previous support and resistance of this level. there we have it. There is a probable, or a very highly probable area that the banks are going to be shorting from this position. We're not Mystic Meg. We don't know this for sure. But what trading is all about is finding the highest probability trade. I've given you 3 or 4 reasons there why this particular area is highly probable to be the area where the banks are going to start to reverse that market from this massive impulse to the upside to then push the market down to the short side. And as you can see from the current reports, they've built up their positions to the short side even greater. So this is going to continue. So back to my chart. I know this is going to be a very highly probable area of a sell. So what do? I enter a short position, and I enter it up here as a pending order. What I do, I set it, I've accepted my loss, I've accepted my profit. Now we just sit back and see what happens to the market, and I'll talk you through what happened to me. So I'm triggered in at this point. I've got my 1 to 3. I've been tapped in there by this candle. I've had my notification. I'm alert that I'm in the trade, but I'm not sitting there watching it. Believe it or not, if you sit there watching it, it's not going to go in your direction. Unless you're Superman, it's not going to go in your direction. Just sit back, relax, and let the market do its thing. If you do like your Forex tutorials on YouTube, Rox FX, a fantastic YouTube trader, will say trust the process, and he's absolutely right. Trust the process. Okay, big bullish candle. This is the last attempt, hopefully, that the buyers are trying to push price up. And there we go. There's the sign that we want. But the bull's been pushing that price up. Now the bears are stepping in to push that price back to the downside in the direction that we predicted. And there we have it. As you can see, tapped out, 1 to 3 risk to reward, 92 pip profit from a very, very easy technical analysis point of view. Things we need to take away from this video, guys. Number 1, keep your charts simple. If you look at my charts, I don't have any fancy indicators going on. I could put them on if I wanted to, but they don't really provide much use for me at the moment. Keep your chart simple. Understand what your chart is telling you. The chart is telling you a story. The candles that are printing are telling you a story. But most importantly, see what the banks are doing. If you're not looking at what they're doing, you are not on the right side of the market all the time. We want to make our trades highly probable, and by doing that, we are looking at what the banks are doing. If you want to do this, and I advise you all, head over to my website, commitmentoftradersclub.com. You get access to the Commitment of Traders reports, all the signals that we post on there. You'll get a copy of our trading plan and an in-detailed tutorial on how to use the Fibonacci retracements if you do not know already. Okay, so traders, I really hope you've learned something new today. Let me know in the comments if you took this trade. I'll be happy to hear if you did. Let me know if you did take this trade and it went not the way you were thinking, and we can all see if we can learn something from it. But in the meantime, traders, thank you for watching. Smash that subscribe button down there. Smash the like button. Leave us a comment, and we'll see you over on the next video. Happy trading. Bye-bye.